All right, y'all. We'll kick it off. This is obviously being recorded, so Jesse, maybe just as a quick kind of elevator pitch rundown, give us just a 60-second breakdown of how Amboss is making an impact on Lightning Liquidity and just the Magma product here for those who are not aware.
Sure. So Amboss is a Lightning Network Explorer, and we recently added the function to be able to buy and sell channels on the Lightning Network. So Amboss created a marketplace that we called Magma, which allows anybody to post an offer, just like anyone could post something. The So it's very
Is
customizable
is Jesse
and
breaking up for anybody else?
Yeah, Jesse, you're kind of cutting in and out.
I believe in you, Jesse.
I could maybe move closer to the router. But overall, yeah, Magma makes it very easy to buy and sell channels on the Lightning Network.
Cool. And just real quick, it's a lot of folks don't realize how important something like Amboss is to be able to see all this public information on the Lightning Network. So can you tell us maybe a little bit like what makes Amboss useful for people running Lightning nodes?
Yeah, so there's an ongoing market on the Lightning Network for liquidity, and Amboss provides live data on how the fee market is maturing, and also information about individual nodes on the network. Every node is different and has an individual set of connections to other nodes on the network. So with Amboss, you can view a node's profile page, if you will, and be able to see all of the data associated and fees.
And for those that are running Lightning nodes that want to have more exposure because they want people to open up channels with them, maybe like not talking about Magma, but just sort of like exposure. What sort of cool things does Amboss offer for like that sort of visibility?
I'm sorry, I didn't quite catch the question.
No, it's okay. So, all right. So, I'm basically alluding to the fact that like folks that are running Lightning nodes can claim their nodes on Amboss and essentially claim their page, right? And then they can like put their contact info or what the purpose of their node is, stuff like that, right?
Yeah, so like a big piece of kind of what we do at Amboss is just help the network stay coordinated. So being able to post your contact information if you'd like to, and that could be something that's like tied to you as an individual, like a Telegram account, or it could be an anonymous email account. But any of those contact methods will help kind of the network troubleshoot issues and be able to contact you if something is going wrong.
Cool. Yeah, I just wanted to kind of have like that Amboss overview because a lot of folks that I've talked to lately, when I introduce them to it, they don't quite understand like what it's used for. So like, I think it's really cool that you can claim your node really, really easily, and and not just claim, right? You prove that you own it really easily, and then you can sort of customize it. It's sort of like a little social media page for your node, which I think is really, really cool.
Exactly. And we also offer a few additional services just to help with network stability. So one of the recent additions was node health checks, which will let you know if your node ever goes offline through a simple script that has been incorporated into Thunder Hub. But you can also do it through other means for if you're running a C Lightning node or a Core Lightning node. In addition to that, we also have static channel backups that you can pretty much upload to Amboss. And so if your node ever has issues, you'll be able to retrieve that static channel backup and be able to get your funds back.
Bobby, anything you want to jump in, or you want me to just keep going?
Yeah, I mean, I'll just say I love that Nate's here because he's been selling on Amboss and getting some incredible results, or selling through Magma, and he's gotten me running my node in the last, I think 5 weeks is what it is, and he's through his education across like 5 to 7 days, it's helped me learn how to manage my node, and I would just say it's not as challenging, I think, as we make things out to be, especially when you can have someone hold your hand. And on Amboss, on Terminal Web yesterday, I was top 1,000 for the first time, so that was like a little victory lap for me. And then on Amboss, I'm actually just seeing it says Terminal Web. I'm in the top 620, and it seems like the data with an Amboss is like leading what I'm seeing in Terminal Web by almost like a week or two. Like, is that correct? Just like a personal question, Jesse.
Oh, we might want to get Tony added onto the Twitter space for the deeply technical questions of how Amboss works. But yeah, we do cache some information, so we're not constantly querying the database of information from Terminal Web.
Okay, yeah, that was just a side question. It seems like yours guys' data is like ahead, and then Terminal's catching up. But yeah, I think my big thing is being in my first month and a couple of weeks of running a node. It's something everyone should do, and Amboss just makes it incredible for decision making. And upon getting your node in a pretty good position, you can actually sell liquidity. And the cool thing about Magma I really enjoy is I got a quick rundown on that as well, and Nate helped me and got some Bitcoin up for sale. And I went camping this last weekend for 3 days, and I missed a Telegram message selling my first channel, but I'm still waiting patiently, so that's like really exciting. But Nate, you can continue.
Awesome. Yeah, I mean, I guess we can just dive into Magma and then the big picture that this is affecting as the Lightning Network grows. So how long has Magma been like out? And tell us a little bit about your expectations before launch and to now. Like, were the expectations met? Just sort of like how it's being used and stuff, if you could touch on that.
Sure, we came up with the idea in February of this year, and then we did a little bit of testing. We had a private beta group, but then it was out for people at the end of April, and since then it's been about 8 Bitcoin per month that has been settled using Magma, uh, and it's of course it's like gone up and gone down. But we're really watching the amount of offers steadily increase, and then the people that actually need liquidity have been buying channels on Magma. And just yesterday, I talked to Bitcoin Jungle, which is a wallet that's based in Costa Rica, and it's basically the clone of Bitcoin Beach, but the Bitcoin Beach is the super popular one. Everybody knows about Bitcoin Beach, so a lot of people are already connecting to the Bitcoin Beach node and able to supply it with liquidity. But Bitcoin Jungle has maybe been flying under the radar a little bit more, and has been actively buying channels on Magma as they get new users. And when they get new users, a whole bunch of people, a whole bunch of deposits are made into the wallet, and so that means that they are running out of liquidity for their node, and so what they told me they're doing is going onto Magma and buying channels to keep the Lightning Network functioning well for all of the users that they're keeping the operations going for.
That's awesome. And that actually kind of like goes to sort of like the next question I was thinking about, which is we'll talk about selling here in a little bit because that's like the most in-depth topic I think we're going to tackle. But let's talk about buying. What kind of folks are buying on Magma? Like just sort of like, I don't know what to say, categories of people that run nodes, because people run nodes for different reasons. So what are some reasons why people would buy or liquidity on Magma?
I would say so for a lot of the people that are actually buying, it's more oriented towards actual routing nodes that want a diverse set of peers so that they can receive funds. And my suspicion is that these are people that want to start stacking Bitcoin over the Lightning Network. They're maybe wanting to take advantage of some of the Lightning withdrawals on Kraken or through Cash App, and be able to make sure that their node can receive funds over the Lightning Network. The other group would probably be merchants, so that they're able to keep their business operating smoothly.
Cool. I want to touch on that first one real quick because I hadn't even actually thought of that. So, do you think that folks would start a node and get that inbound liquidity and then start when they're stacking sats on an exchange that allows lightning withdrawals, they'll withdraw to their node to instead of an on-chain address, maybe for privacy reasons or convenience reasons, maybe they want to like maybe they want to spend it on gift cards or something rather than maybe they have like two ways, right? Maybe they have the cold storage and maybe they use their Lightning node to buy stuff like that, maybe.
Yeah, and let's see, I haven't done all the user interviews that maybe I should have done before this to understand why exactly people buy channels. But another example that I did see was one of our users was actually starting a swap service. So they're creating a way to go from Lightning to on chain, and what they did before launching this service is they bought a whole bunch of channels on Magma in order to increase their rankings through the different metrics on the Lightning Network. And if you are actually highly ranked on the Lightning Network, it becomes like kind of a self-fulfilling prophecy that you'll get ranked on Terminal Web, and a whole bunch of people will start opening channels to you because Terminal Web says you're a good node to connect to. So it becomes a little bit circular once you get past that first step of getting the reputation that you actually have inbound capacity from a whole bunch of nodes on the network.
Awesome. Yeah, and like you said earlier, you touched on, nodes that are springing up to primarily receive, right, such as merchants and stuff like that, could easily use Magma to just accomplish those liquidity needs, which is really, really, really cool too. It's important to note though that your node needs to have at least one channel on the network, right? One announced channel in order to claim your node on Amboss. Correct me if I'm wrong on that.
Yeah, we can't. We'll need to see you inside the Lightning Network graph of nodes, and so Amboss needs to receive gossip, which is already kind of filtered through the network, and each of the individual nodes have verified, oh yeah, this is a legitimate channel, and then they pass on the information. And Voltage's most recent announcement, I'm really excited about them stepping in to help with that. If you want to touch on that just a little bit.
Yeah, no, that's great. Yeah, so right now, if you start a Lightning node hosted on Voltage, there is an option for 500,000 Satoshis of inbound liquidity open to your brand new node from the Voltage master node for no cost with one click. So just right on your Voltage dashboard, need 500K sats, boom, open, and you get some inbound liquidity. And that's also important for what we just said, right? Like you can also receive up to that amount now, but you are also starting to become visible on the wider network, which is really, really important for things like claiming your node on Amboss and starting to build up reputation if that's your goal as well.
Yeah, so that basically means that you don't need to have Bitcoin in order to start up a Lightning node. You can already start receiving funds as soon as you get started with voltage.
Exactly. And this was sort of an idea that we sort of put together over the last month or so. And it's sort of phase one of a growing liquidity project that we're building out. So this is just phase one. We're going to be working on a lot of cool stuff. So keep an eye on us. But yeah, cool. All right, so let's talk about Magma a little bit more on the sell side. Without, if someone's been running a node maybe and they're medium sized or so, like how much when would you say is a good time to start selling channels? Because those that are buying, it's like a shopping cart. Not a shopping cart, it's like a store, right? You can sort of pick, like you see all the orders, you see who's offering liquidity, and then you can click them and see their Amboss page and sort of vet them for any metrics that you want to see, such as, what's their average channel size, how old is their node, what in general are the fee rates that they set for their current peers, things like that. Do you see the amount that folks are earning change based on like these metrics at all? I guess what I'm getting at is, are nodes with specific metrics earning more because they're perceived as being higher value to the network?
Yeah, we don't have the analysis quite yet, but what we did optimize for is sort of the reputation, and the reputation has a score that is partially due to their like liquidity profile. So if they're already highly ranked on Terminal Web, there's some reputation points associated with that. But the other piece is how responsive are you? So if someone requests a channel from you, are you going to be able to fulfill that need? Because one thing that we notice is that when you have like a liquidity crisis for your node, you need to be able to resolve that quickly. And so we've kind of optimized the reputation score so that it can be like very quickly responding. So yeah, if you get a request for a channel, try and open that as soon as you can, and then you'll be rewarded with reputation. And then when it comes to actually suggesting channels to buy on Magma, we combine that the APR, so the cost of a channel over that duration, with that reputation. And so we'll sort them by a combination of the reputation and the APR cost.
And folks that are selling are really incentivized to do that too, for all the reasons you just said. But Amboss and Magma has I would say lightly gamified it a little bit, right? Like if you're really, really quick at securing or fulfilling those orders when people decide that they want a channel from you, you get cool little tags, right, by your post that say you're a really fast opener. And these sort of things are really cool sort of accolades, because not only, are you more visible, but what I'm kind of getting at is you can probably charge more now a little bit, right? Because folks will see that and likely maybe pay more for that high quality.
Yeah, that's totally right. And we've watched one user, Minter, who I would not have known about otherwise, other than through Magma, but they've already opened 44 valid channels through Magma, and yeah, because they're very fast at opening, they almost get to control the market for this, because they're very high reliability. So it's yeah, we have gamified it a little bit, but this is kind of in the interest of knowing that like when you have a liquidity issue, it needs to be solved quickly to keep your business running.
That's awesome.
Jesse, I have one question. I'm on the Magma page, and I see Mentor has a score of 93. A new node has a score of 49. Like, how does that score derived? I don't see that, but I think that that makes an impact on people's decision making. It sounds like.
Yeah, certainly it affects like the visibility, because when people go to buy a channel, we'll suggest a couple of them. So with that combination of reputation and APR, but the reputation score, we describe generally how it's calculated in the documentation, which you can find at docs.amboss.space.
Got it. I see that here.
The thing is too is it's important to like let everyone know that if you're just starting and you're starting near the lower the rankings or the reputation or whatever, that's perfectly okay. You just probably just need to charge a little bit less for the channels that you offer, and then work your way up, and then you can work your way up to that high value, because I think folks, you know, might be okay with vetting you saying, "Oh, you've got whatever 20 channels and you've been on, you've got 6 check marks on terminal web, and you're only charging 1% APR or something. I'm just gonna buy a channel from them," sort of thing. And then you can work your way up by charging less at the beginning. That's kind of how I'm thinking about it anyway.
100%.
Awesome. Wow, we got through a lot of stuff in 20 minutes. um, yeah, Bobby, ask some questions. I'm gonna take a little break here.
Yeah, yeah. I think the one thing that I know is on a lot of people's mind is the growth of the Lightning Network and just the liquidity within the Lightning Network, and that's one thing that needs to be solved. There needs to be demand before larger capital allocators come in and deploy more Bitcoin, but there's also things coming down the pipe like Taro, for instance. I'm curious, like, just how you guys are thinking and just framing like your thoughts with Taro down the pipe, because it seems like, from my limited knowledge, people would want to potentially take some intelligent steps right now to prepare and get their node in good positioning for future routing, since if I'm understanding correctly, there's leaf nodes on the edges that allow Taro assets to be sent from one person to the other. But even if I'm not a Taro node, I can still allow that information and just asset to flow through me and earn yield, which I could use Magma for. Am I expressing that correctly?
Yeah, that's correct.
Yeah.
I'll go really quickly here. So with Taro, I don't know how many years Taro is out necessarily, but right now it's a protocol in development by Lightning Labs. And it's not just it doesn't just work over the Lightning Network. It also works over the main Bitcoin blockchain, which is very cool. So parties can issue assets and then sort of use the Bitcoin network as like transmittance rails. So where this benefits Lightning Network users and the Lightning Network as a whole, especially, is people will think, okay, other assets, multi-asset functionality, hopefully, not pictures of a monkey, right? Because that's what this, idea of several other assets means. Like when we think altcoins, that's sort of what we think of. But, you know, in my mind, the use case immediately jumps to stablecoins, the ability for people to have stablecoins in the exact same wallet. Right now, you sort of have the beginning stages of that concept with companies like Strike allowing you to hold, stay your dollars and your Bitcoin in the same quote unquote wallet. But it's not the same wallet. It's the same user interface, but it's completely separate things. And a company like Strike relies on banking relationships in order to make that sort of thing happen. But that idea of being able to, if I have USDT and I want to send some to Jestpher, right? All I've got to do, with Taro is I have to know that I have USDT. Jestpher needs to know that he's going to be receiving USDT. We're the only ones that need to know about the asset, and then it can get routed through Lightning Liquidity. And so basically on the first hop, it transfers immediately into sats, and then on the last hop, it transfers back into USDT. And so, in my mind, there's always going to be a demand at least for the next few decades, for fiat instruments, for dollar instruments. Those are definitely not going away anytime soon. And the ability to leverage the fastest settlement network known to man, that's major, because any increase in transactional capacity for these instruments will come with an increase in liquidity on Lightning in order to facilitate these transactions. And so you could, in theory with Taro, see an absolute explosion, exponential in the amount of liquidity on the Lightning Network, because new participants enter in order to try to capture some of the fee from all of these new assets that are coming in. And so I think, especially right now with something like Magma, positioning your node and really learning and preparing right now to route transactions effectively for that future where all these dollar instruments, all these other fiat instruments are trading over Taro, conceivably, setting up your node now so that way you can benefit in the long run. That's going to be a pretty major thing, I believe.
Yeah, I'll just jump in on that and say I definitely agree. Like right now, as someone who does run a routing node, like I really don't care about Taro per se, but I do care about more throughput on my node, which means more fees for me, which is really kind of cool. And there's other industries and stuff too that are actually starting to sort of get wind of how cool it would be to settle, uh, commodities and stuff on the Lightning Network instead of having to do it, once a week or something. It's instant. They could do it every hour. Really, really cool ideas like that. I think people are starting to get used to in conjunction with Taro. Even that would even be a really, really interesting aspect of the Lightning Network in the next few years. So I'm definitely really excited. I definitely echo your sentiment about, if you're sitting on, a little bit of sats and cold storage and you want to get a little routing node going, it might be absolutely worth it.
Yeah, and Jesse, I want to kind of. Did you have something you wanted to share just in response to all of that before I ask another one?
Yeah, I really appreciate Joe jumping in. And one thing that kind of like on the framing piece, Lynn Alden has kind of talked about, what is Lightning Network versus some of these like DeFi applications. And like a lot of the kind of yield generation that you hear about in DeFi is the yield is driven by speculation and by leverage, whereas for the Lightning Network, the yield is driven solely by utility for the value settlement. So that settlement can happen across borders, and it serves the needs of people all over the world that actually just need to settle transactions. And that is all built on like Bitcoin and the protocol that has survived for 13 years and has been hardened by like attacks and such. So when we have this settlement network that is maturing on Lightning Network, and there's a reward for actually providing liquidity that is used for value settlement. As soon as you layer on Taro, like now you have access to what I imagine will likely be stable coins that will be Taro assets that could be relayed over this same settlement network. So just like when you have more throughput, when the Bitcoin exchange rate goes down to actually settle the value, as soon as you like start layering on other assets, that means that there's going to be a lot more throughput on the Lightning Network. So the yield curve that might generate from these APRs for actually selling channels, that's going to start maturing, and the value of Bitcoin on the Lightning Network itself, that value will increase.
So the reason I brought that question up, and I'm going to try to relate this in a good way, just to bring clarity to the conversation, but we've seen a lot of hacks in DeFi and even with NFTs and just a lot of these things. And yesterday, or on the 8th, Jeff Booth put out an article, Finding Signal in a Noisy World. And he breaks through like what's hard to understand, harder and hardest. And what he really alludes to is that protocols are really challenging for people to wrap their mind around when you think about TCP/IP, HTTP. And when we're talking about protocols like Bitcoin, Lightning, Taro, everything being built around it, when we think about the average user, they're excited to like easily trade art and make money. They're excited to like easily stake and make money, and it really kind of expedites things in a very risky manner. And we've seen that with 69 billion plus dollars in hacks at this point. Most recently yesterday, Curve Finance or Curve Protocol, the DeFi project, was hacked. And what I'm really connecting the dots and understanding is in Bitcoin, these protocols in a truly decentralized manner are evolving layer by layer. Bitcoin, Lightning, Taro, and others. Um, People don't have the utility. They can't experience these later things that are easier to understand, which a lot of altcoins are building, very quickly without considering a lot of the stuff that, um, you know, Bitcoin first builders are really being intentional about. So why I bring up that question is like people should prep and build a node now, start caring about liquidity, is because from what I'm seeing and understanding just in the market and how just these protocols are developing is it may not be on Bitcoin yet, but there's going to be a lot of precedent based on these hacks and issues and just exploits where when it does come to Bitcoin, you are not going to want to be super late. And I think there's not a ton of clarity in the market. So I'm curious your thoughts on that, Jesse, and even you, Joe. Like, if that just kind of makes sense. Like, and Jeff's article really kind of connected the dots for me and made me try to think a bit deeper and how to remain patient, I guess, as these things get built out, if that makes sense.
Yeah, I think generally it's early days for the Lightning Network, but as we're building out this infrastructure, and showing its stability and letting the Lindy effect, run its course, that it will be more attractive. Whereas some of these other protocols may get hacked and such. And one thing that sticks out to me is a lot of these other yield products are often they're custodial, whereas the Lightning yield here is non-custodial by default. Of course, you could build a custodial yield product on this, but for the most part, people don't have to entrust their funds with some other entity. They can still participate in routing payments on the Lightning Network, and it doesn't require a ton of experience to be able to do that. It's very easy to start up a node, and you can start building a reputation and be able to enjoy the fruits of your labor as the protocol develops and other assets come to it.
Yeah, so I fully agree. The word yield has been absolutely tarnished since the start of the year, to put it really lightly. And even before that, you've seen billions of dollars of liquidity just completely vaporized, not just in obvious scam casinos, but in genuine hacks on DeFi. And with Bitcoin and Lightning, you have a lower overall risk profile because, you know, relative to the industry, you have the highest overall security profile. And so this sort of opens up, Lightning Network opens up the possibility, and I hope the eventuality, of the word yield being reclaimed for what it actually means, right? On Lightning, you're providing a business, essentially, you're providing a service that people want, of efficient channel management and effective routing. And that is essentially, an actual yield. It's reclaiming this concept of yield that's been decimated over the last couple of years, by these yield from nowhere schemes, all while doing it, with a lower overall risk profile than not just other cryptocurrencies, but even traditional capital markets. I make this case pretty frequently over the last couple of weeks after I've dove deeper into all of this. But ultimately, what you're looking at is an actual genuine method of earning yield, because you're providing a service that is inevitably, in my purview, going to increase in demand through time as Bitcoin continues its monetization path towards medium of exchange, and things like Lightning Network increase in demand.
I was talking to I forget who it was. It was like maybe a couple weeks ago, but they were really adamant about we need to stop using yield for like just that word entirely for this concept that we're talking about, because like you said, it implies investment, it implies risk of some kind. Like the riskiest thing you could do with Lightning, assuming like it works, is I mean, the worst case scenario is you just don't make anything. Like it's not that you lose anything. So we came up with this idea of, instead of calling it like yield, we call it liquidity access fees, which I don't know if I'm on board with or not, but I think that's still a more accurate description. It's just a liquidity access fee. But I think that's I agree though. We just need to keep working on this, just like a lot of the vernacular in the Bitcoin space is a little bit muddied. I think it was really interesting to think about, uh, like folks want to use their Bitcoin to make more Bitcoin, but these yield people that we were talking about, they just want to dump their capital somewhere and just passively watch it go up. So maybe someday there will be, I mean, this would be a custodial thing, but maybe like there'll be nodes that somebody's running that's extremely high ranking, high reputation, and they just open up, you know, they just sell channels for like with the capital provided by others and give them a part of that return. That could be an interesting idea going forward.
Yeah, I think through time, one of the things a lot of people get scared about is the centralization of nodes towards entities who are fantastic at managing them. But ultimately, again, we talk about the concept of basic, virtually no risk, apart from maybe not having access to your funds for a little while, or not getting anybody to route through your liquidity and not earning anything. So like calling any drawback of the Lightning Network risk, I think might not be the best thing to do. But over time, you're gonna see like basically fee routing and all these different instruments, like you just mentioned, selling liquidity. This will happen, in my opinion, with more and more centralized entities, and that's not a bad thing, because the security profile of Lightning is such that it disallows centralized entities to be bad actors, in my purview. And so, River Financial right now, they have obviously a massive amount of liquidity. It's conceivable that down the road they sort of adopt a second aspect to their business of being like a de facto Lightning bank, where not only are they routing transactions, but they're also leasing channels and things of that nature, because they themselves can effectively do it. I think that's as natural as, in every single society, observable throughout history. We've seen like the emergence of goldsmiths to hold people's gold, and then lease out gold to people. I think over time, because of not every person who uses the Lightning Network is going to have the technical wherewithal to do these things, right? I know I personally, a couple of months ago, literally all I knew Lightning was good for was, I have a Moon wallet. I can send and receive funds for way cheaper than I can on the main blockchain. And I think that's still going to remain what the average person who uses the network will know. I think, centralization towards entities who are specialists isn't a bad thing when it comes to Lightning.
Yeah, I really hope that with more, like right now, I feel like there's like two extremes. There's like the really custodial, easy to use, wallet of Satoshi type stuff, and then the other hand, you have get a Raspberry Pi or build a machine yourself, learn Linux, all this stuff, right? But like, I just want to like pivot over a little bit to like, Voltage is trying to like do something that's kind of like in the middle. Like we want to like give people that Lightning node experience without all of that weird technical, I don't want to say roadblocks, but kind of, that folks kind of have to deal with when they're running their own node and stuff these days. So hopefully we can sort of, smooth the edges around that concept and bring more people into running their own node. But like the thing is too is like if River or for example, just whatever, some node on the network just like is really really high in demand, like you can't have a channel really with everybody that you're going to pay in the world. There's always going to be a need for routing and other nodes on the network. But like you're going to be like I'm always incentivized when I've got some capital and my node is full of inbound liquidity. I'm always incentivized to try to figure out who can I open up a channel with that I can have really high fee rates on my channel to just kind of like let it drain down. Something like Bit Refill or the Loop server or something like that. So I think that those sort of incentives for high demand nodes would continue even if really big centralized entities had those sort of services and stuff.
Well, I'd love to kind of shift this a bit in the direction like you guys were talking about a minute ago. When we're talking about larger node runners and institutions, like one thing I believe you showed me, Nate, was like balance of Satoshis, and I'm sure more of these tools will come out where whenever you're gathering data, you can say, hey, route around this node. So I think there is a bit of control. I don't know, how deep that goes and how confusing it can get for some automations to, avoid centralized nodes, if you will, not centrality, like high centrality nodes, but maybe centralized ones. But I would love to pose to you, Jesse, like what type of conversations are happening right now when it comes to the interest of, let's say, larger institutions or folks in venture capital who want to deploy Bitcoin under the Lightning Network? Like, what type of things are they wanting to see happen? If you can maybe reveal a bit as far as like what needs to happen in the industry for this growth to just happen.
One thing that I've picked up is that some of the more regulated entities generally want to work with other regulated entities. So, for example, like when Kraken started up their node, a couple of people spotted it pretty early, and you could look up their node on Amboss and see that they pretty much uniformly open channels to other exchanges. So it was Bitfinex, OK Exchange, and it and they were keeping it very insular, and so they weren't allowing other people like the plebs just to connect to their node. So I definitely see a whole bunch, like from the investor side, a whole lot of concerns around like who's going to be who's regulated. I don't want to violate any laws or anything, or like what if the user I'm connected to is buying drugs with through their Lightning channel? Like there's lots of those concerns. And one thing that I'm excited about is maybe Fedimint kind of moving in here and helping the Lightning Network remain fungible, where we don't have these concerns about where the money's going and whatnot. Just kind of keep those concerns at bay. So that's one thing that I'm noticing. But another piece, we kind of tapped on this, like we started to talk about it a bit, which is pretty much just leveraging your social network, because now your social network is happening in a financial network. So, for example, like when BTC Sessions starts up a node and he names it BTC Sessions and he verifies that, hey, this is my node, a whole bunch of people are going to connect to him because a lot of people deeply respect the educational work that he's doing. And so he would be able to access liquidity a whole lot cheaper than someone else would that maybe doesn't have as much reputation. Like if I have a node and I just name it Jestpher, like not a whole bunch of people that are going to connect to me because like I don't have a ton of subscribers on YouTube and I don't have a massive following. But like your social network essentially has value. So that's one aspect that I think is really interesting that investors might want to start paying attention to, because your reputation is very important on the Lightning Network. And I've thought for a long time that it's very much a moral economy. So when it comes to pathfinding, where you could actually choose exactly which hops your payment takes, you could leverage a tool like the folks from Rings of Fire have developed, where they're opening new channels to each other and making a cool ring that goes all over the world. And in order to rebalance that ring of fire that they made on the Lightning Network, there was actually a script that was developed to actually choose the rebalance path. So actually actively choose which nodes your payment is going to route through. And using that same technology, you could actually choose which path your payments are going to take. So you could choose to reward your friends on the Lightning Network, or using balance of Satoshis, by default, it's going to choose the cheapest path. So it's going to make a series of probes and actually find the cheapest route, instead of maybe one of the default pathfinding methods is just to route based on reliability and say, okay, which path worked last time, and maybe I'll just try that one again.
That's pretty incredible. I can imagine like just the utility of like banks that want to run a series of nodes globally. They could use that and just deploy $15 billion of Bitcoin and manage all of their users' Bitcoin if they just wanted to run it within just with it for themselves, or maybe with other network banks. I'm sure there's much deeper use cases, but that's fascinating to hear.
Yeah, so I'm very curious how the network is going to respond if there are big centralized entities that are going to spin up nodes, and they're just going to be these massive things. It's really cool if there's going to be a lot of utility that they're going to create, like by deploying all the capital, but it's still an open question. Just by having Bitcoin doesn't actually mean that you're a great node on the network. It's really about where can you route payments, and is this actually going to get used? And a couple of the things that I'm excited about is the Lightning Network reaching places where there isn't good credit or debit card infrastructure. And those types of areas could really benefit from a settlement mechanism like the Lightning Network provides, especially if there's stable coins or through Taro assets included on the Lightning Network.
Wow. Well, we usually open up the end just for folks to ask questions, so feel free to raise your hand. We'll let you up. But everyone who's up here, any final maybe questions or things that you'd like to share as well, maybe that we have not covered just in terms of Lightning liquidity?
Well, one thing I will say is thank you to everybody on stage, because you guys are building the on-ramps that are necessary for not only exponential liquidity growth on the Lightning Network, but the potential for like an entire global capital market to emerge, with sort of with Bitcoin at its core. You guys are dedicating yourselves to making Lightning Network more accessible, making it more viable for entities to not only see that they can earn an income through actively managing channels, but building the tools that will allow that to be easier for them. So I know, the least that I can do is continue writing about these things, continue being a mouthpiece to shout from the rooftops. But really, guys, keep up the good work. It's absolutely fantastic what's going on.
And thank you so much, Joe, for actually writing about this. I think you were one of the first to actually recognize what's happening in the Lightning Network and how it's maturing. I heard you were on Preston Pish to talk about this some more. So I would encourage people to take the conversation a little bit further and listen to the latest Preston Pish episode. Very excited to listen to it myself. I just found out that it came out, so awesome work.
Agreed.
The only last thing I have, Jesse, is there any? I know you guys are working really hard. I know that a lot of folks have requested a lot of features and like additions and stuff because we all see the potential of what Amboss is building. Can you tease out anything that's in the works that we can look forward to in for the rest of the year or coming up?
One thing that I can tease is you're going to want to update to the latest version of Thunder Hub. I think folks will be very pleased with what they see there.
Right now or coming up soon?
Go ahead and update now, and I imagine we'll have a couple of issues that pop up, but yeah, keep it updated, and yeah, I think you'll see some very nice interfaces that might help you interact with Magma.
Oh man, it's gonna be a good day.
Awesome. Well, Jesse, thanks for being a guest. Joe, thanks for pausing the pump to join us and come up here and add some value. So, everyone, check out the podcast on the Investors Podcast that had Joe talking with Preston Pish. It's a banger. I listened to it this morning whenever I was doing my workout. So, great work there. And yeah, we do these spaces typically every Wednesday at 4 p.m. Central. We did this one early just because Jesse's traveling. So, thanks for making it happen, man. I know you're busy, and we appreciate everyone tuning in. We'll have this uploaded on YouTube soon, and everyone have a great rest of your Wednesday.
Thank you, guys.
Thanks so much. Keep building.